So I'm Shannon. I'm the head of node operator mechanisms at Lido. And as mentioned, we're going to talk about stVaults. And compared to what Marin was just talking about, like the way I like to think about this is earn ETH vaults are really like strategy vaults, right? Infrastructure side. This is a core staking protocol mechanism, and stVaults are now the new part of the protocol that was added as a part of Lido v3. So one important thing to just kind of note here, the Lido that we all know and love, Lido core that's existed for years, stays the same. Actually will improve, and we're going to hear more about that this afternoon. But stVaults are really a new mechanism that allows for node operators, for DeFi builders, for asset managers, for anyone really to be able to deploy custom staking infrastructure where you can work one-to-one with different institutions, different stakers in a very segregated way. They're non-custodial, they're permissionless to deploy, and they allow for really amazing flexibility as compared to normal native staking, or even in some specific use cases, if you need full staking via LSTs like Lido directly via core. I think one of the really interesting things here is that this now allows for stakers to actually choose the node operator that they want to stake with. And this is very, very important for specific institutional customers that want to sign contracts directly with different node operators. This is important for a DeFi curator that wants to run a strategy with staking as the reward layer at the bottom. And so really opens up the optionality. When you stake ETH with an stVault, the ETH is staked in the validators, again, run by the node operator of your choice. By default, this looks very similar to native staking. However, it's wrapped in an stVault contract. The main difference here is that you have the option to mint stETH if you choose to do so. And this allows, again, for a lot of flexibility because you can take this into DeFi, earn additional rewards. You can use it for liquidity. And we're seeing like tons of interest across all of these different kinds of segments. I really think that like one of the big and exciting use cases for stVaults is this will start to be the core reward layer for DeFi Vault products in general. The idea of starting with an LST, that 2.5 to 2.8% APR as the core of your strategy makes a lot of sense. In general, I see three like target segments for stVaults where it makes sense. It's this kind of higher risk DeFi user. It's normal delegated staking where they value having liquidity. Imagine an exit queue and there's a 45-day period where you can't get your ETH out. You can do that very quickly with an stVault. And the third is on institutional staking. And we're going to talk about that. In general, what I want to do today, I think that the concept of stVaults hopefully is clear, and many of you have kind of heard the pitch over the last years we've been working on this, is I want to give an update on where stVaults are, and really importantly, what I think are the opportunities based off of the conversations we're having. So I think this is pretty key. stVaults have launched basically 61 days ago on January 30th. And if any of you have checked the market, which I'm sure you have, it's been a bit of a rough go. So just some like quick stats, right? Like ETH is down 57% from its high in August, and it's down 20% since we launched this product. When you have a staked ETH vault, if ETH is down 20%, it's not great for some folks, right? Spot volumes are down 45% year over year, which is pretty crazy. This is actually tracking for one of the worst months in like literally years. I didn't fully appreciate that. DeFi TVL has basically halved in the last 6 months. And for any of you node operators or really like staking savvy folks in the room, you have seen the volatility in the queues, right? And these queues lead to pros and cons for certain aspects of the staking market. I really, really wish that stVaults had been live in September of last year when the exit queue was 46 days. You would have seen the value of having liquidity. Unfortunately, we launched in January, and now we have the entry queue. And the entry queue is pretty bad for stVaults, but that is not a unique problem. It's pretty bad for every single staker on Ethereum, unless you stake with Lido Core, where you're going to start earning rewards within 24 hours. And like, pretty cool. In general, this has been a slow start, I would say. However, the conversations we're having are incredibly, incredibly encouraging. And that's what we're going to talk about. I think we have really good traction given where the market has been. There's 34 identified node operators that have come on the Lido Research Forum. They've gone through a process to say, hey, we're open for business. We're going to support stVaults, and we are going to launch strategies using this product. There's 15 deployed vaults. Some of these are already accepting public deposits. Some of them are like private client vaults. Some of them are in some stage of getting ready to roll out. And there's many, many more coming. Currently, there's about 5,500 ETH that has been deposited, and there's about 4,500 ETH that has been minted. Now, I think this is really interesting. these numbers are quite small for Lido scale, right? But an 80% mint rate really shows the value proposition of this product. This is higher than I would have expected. And again, small numbers, but the strategies that are in place today are in place in a way where they're actually using stETH. They have the option to not mint stETH. They have the option to go to Lido Core, but they've found value in minting stETH already. So we're going to dive into the validator queue a little bit. The entry queue currently is at 48 days. It topped out at 71 days a couple months ago. And you can see on the charts here that there's been like a ton of volatility. If you looked at the all-time charts, it would look much more flat, basically for most of the prior history, other than the entry queue post when withdrawals went live a couple years ago. So again, we had this period a few months ago where the exit queue was high. Now we're dealing with this high entry queue. And I think right now we would get to June where that 48-day period goes to zero. I personally am not super optimistic that in June it'll be done. I think there's a lot of stake that's on the sidelines. But what I am very certain about is that when that queue comes down, it's going to be a major tailwind for stVaults. So if you ask me about these three customer segments that I mentioned, right? So the higher risk DeFi, the delegated staking and institutional kind of clients, I would say that the DeFi strategy kind of vaults would have been the first ones that I would have expected to really ramp up. Now, the problem is that looped and leveraged staking is a major component of most of those strategies. And trying to do a leveraged staking strategy when you have a 45-day queue between every loop basically just doesn't make sense. That demand is there. Almost every node operator we speak to is interested in it. And I also think that from an institutional perspective, it's one of the easiest staked DeFi strategies to kind of comprehend. So this is going to come back. It's a major portion of Lido's growth historically. It's a major portion of Aave's TVL, this trade. And so when the market kind of gets to a better place, you will see that come back. The next is delegated staking. And for certain kinds of customer types, there is actually a mitigation factor that we're going to talk about on the entry queue. And that is via consolidations. So consolidations is a mechanism that was introduced in the last hard fork, Pectra. And there's really two different flows you can kind of think about if you wanted to migrate to an stVault today, especially if you had existing stake and validators. The first is kind of the standard deposit, exit, and re-enter flow. And we'll imagine that you have 10 validators, so 320 ETH. If you wanted to move that to an stVault today, you would have to exit those validators. The exit queue is basically 0 days at this point. You would get that very quickly, but then you'd have to wait for the withdrawal sweep time. You would then deposit that ETH from the EL into your stVault, but then you're waiting for 50 days. 50 days of no rewards. I'm not great at math, but if we imagine that that's 60 days, like that's basically 1/6 of your potential rewards for the year are wiped out. So for many people, they're not going to do that. It doesn't make a ton of sense. However, for clients that do want to stake in an stVault, they value that optional liquidity. They value and look at the fact that the entry queue is now spiked the way it has, and we're very likely to see on the other side of that at some point again, the exit queue spike again. And they want to have liquidity for when that happens. Consolidations is a great way to do this in a very capital efficient way. So instead of exiting the 10 validators, you only have to exit one of those validators. Your other 9 validators continue to earn rewards. That one validator that you exit goes through that same flow. You exit, you wait for the sweep, you redeposit it to the vault. 50 days later, you're able to then trigger the consolidation after another 24 hours. That whole time, the 9 validators were earning rewards. And when you do the consolidation, there's only a 256 epoch or 27-hour period where you don't earn rewards. That's 90% of retained earnings on 10 validators. But this really scales. So if we look at the bottom of the chart here, where we show 1,000 validators or 32,000 ETH, out of 32,000 ETH to use consolidations, you only need to move 512 ETH, 16 validators to use MaxEB and consolidations, the combination of these two things. So when you do this flow, you actually retain 98.4% of the potential earnings that you would get over that period, which for the cost and benefits of liquidity, I think makes a lot of sense. This is something that I think we need to do a better job over the next months of kind of explaining. There's a lot of folks that aren't aware that consolidations is a way to actually migrate in this way. And from the conversations I've had with node operators over the last few weeks, and for the customers that they have that are saying, hey, I want to get into stVaults, this actually can make a lot of sense for us. So I think that this is something that we'll start to see that second segment that I talked about, that normal kind of delegated staking segment that already exists, start to ramp up with stVaults. In general, what I kind of want to leave here is this. I think we're early. stVaults are 2 months in. It's been a crazy market, but I really strongly believe that it's a great time to start building. And that's for this reason. Over the last 6 months, we have had conversations with the biggest DATs, tier 1 asset managers that manage trillions of dollars. We have had conversations with hedge funds, institutional funds of all types, really, big node operators, big stakers, big whales, and they are all interested in staking. The really thing that sticks out to me here is that sales cycles and staking, the staking marketplace, has changed drastically as this institutional segment has come into the market. The time to go from 0 to 1 to stake with Lido is longly extended, right? It's greatly extended. And if you're a node operator that wants to be able to support institutional capital, if you want to be able to support what I think is this real look down and willing to go down the risk curve on DeFi side with institutions that'll come. If we think of the DATs right now that have started with very basic native staking, at some point they are going to look for higher yields, and that yield will come from DeFi strategies. And LST-based DeFi strategies make a lot of sense for this. Then if you are a node operator, if you're a builder, you need to have that infrastructure in place today, because the conversations are going to take 12 months. The conversations take a long time. And so what I would encourage you to do is, if you're a node operator, if you're interested in working with a node operator, is start thinking about this. Start having these conversations. Come to the Lido Research Forum and say, hey, we're interested in building. And if you have questions, we're happy to help support. But the opportunity here is great. The opportunity is very significant. The scale of these players is completely different, really, versus what we've thought about before. And the brand names that are interested in this is also really incredible. So I want to go back to a little bit about the value prop around why stVaults and why staked ETH make a lot of sense, right? So stETH is obviously the largest liquid staking token in the market. Over 50% of the TVL of the token is currently used in DeFi actively as collateral. And what's really, really interesting is, even though volumes are down, the liquidity premium of stETH compared to other LSTs has been maintained in the worst volume quarter since 2022. On a trailing 12-month basis, stETH average daily trading volume is still over $100 million a day. That is very significant, and that is enough to enable institutions to utilize stETH. WisdomTree has a listed ETP live using stETH, and you're going to hear more about that today. But they were able to basically say, hey, this secondary market liquidity is good enough for us to support a listed and regulated product. And from the stETH venue side, you'd be hard-pressed to find a token that is more well integrated. If you want to create complex DeFi strategies that are differentiated, you can do that. And from the institutional side, with custodians, there's been a tremendous amount of work done to support custodian integrations. For any custodian that supports Wallet Connect, Fireblocks, Copper, BitGo, Anchorage, Koimanu, you can get started today using stVaults via Wallet Connect. And we've open sourced the stVaults UI, and there's also the DeFi wrapper set of tools that will allow these custodians to also set up native integrations over time. DeFi wrapper is a really, really cool product to get started. This is really off-the-shelf tooling that allows you to basically click a few buttons, deploy a vault that creates end-user strategies. This is a low-code tool, and it makes it very, very simple for you as a vault deployer to get started and have an end-user product. It supports things like the ability to have pooled multi-user staking with very, very customizable fees. You are able to integrate into Lido Earn, which you just heard about from Marin. And this, I think, is quite interesting, because if you're a node operator, this is a commodity business. It's very, very competitive. We're seeing consolidation. It's tough. Issuance is coming down. But the ability for you to create a differentiated strategy without having to curate it is really incredible. And you can set up an stVault and now go to users and say, hey, here's your gateway to a higher than staking rewards rate. You're just the infrastructure provider. We're going to see a ton of usage of this. The other thing that I think is amazing about stVaults, we have no interest in taking your customer. We have no interest in controlling the customer relationship. It's all you. And you can we have the supported white label UI where this Lido sign can say whatever company you work for. You can make it all in your branding. And they won't even know that they're necessarily using Lido behind the scenes, other than if they potentially are holding stETH directly. So Earn, I think, makes a ton of sense. And again, you can get started in minutes. DeFi wrapper, deploying it literally takes, I think, 15 minutes is the fastest that I've seen it done. Creating and deploying into this strategy is very simple. And I also think that for potential stakers where the entry queue is an issue, but they have the ability to take the risk, required to use a product like this, it's a really good way to mitigate the missed rewards or no rewards of this long, elongated entry queue. There's a long list of partners that are not shown here that are also already deploying, but we are doing a ton of co-marketing. If you're interested in building, like, we're happy to help support from that side. You're going to hear from some of these folks today that are also doing presentations. I will point to the note at the bottom with Linea. So Linea has announced yesterday that their Yield Boost product is going to be going live, and they're starting that. This is huge. This is going to be a very significant amount of ETH. They're basically going to be staking some of the bridged assets via stVaults. It's an incredible demonstration of what stVaults can do, and it's a really, really cool use case, I think, for an L2 to support its users. So we're excited to see that like going live shortly. So again, I really think there's a huge opportunity here. I have been working at Lido for 4 years. The conversations, the quality of folks that we are speaking to now is like pretty shocking compared to where we were a year and a half ago, 2 years. Like the market has just completely changed. It was completely inaccessible to talk to these folks before. And I think that for so many of the people in this room, there is opportunity for you to use something like stVaults to reach those users, to combine and really take advantage of the network effects that the largest liquid staking protocol has and offer your own products based on that. So there's a bunch of folks from the Lido team that are obviously here. We'd be very, very happy to chat about potential use cases, about ideas you have. Really appreciate the time. I think we have like an incredible agenda today. So looking forward to it. Thanks.